Now, as we learn, first off, I'm just going to take you to the bottom of the page and say that when used as a gift or a form of compensation, fruit of the spirit slips, love receipts, money verse tokens, and love notes must be accounted for just as you would account for any other medium of exchange, including but not limited to cash. What that mean? We got to account for everything just like cash. I mean, everything. We got to account for it just like cash. Ain't no difference, y'all. This some money. We dealing with it like money because it is real money. Now, as we learn, first off, I'm just going to take you to the bottom of the page and say that when used as a gift or a form of compensation, fruit of the spirit slips, love receipts, money verse tokens, and love notes must be accounted for just as you would account for any other medium of exchange, including but not limited to cash. What that mean? We got to account for everything. And right now we're finna talk about these accounting considerations. So Flip, let them know what the background looking like, artistic considerations. And then Alex, break it down.
All right, man, we got a calculator. We got some numbers on the paper. Look like we finna get to the money, man. Let's jump right into it.
Alrighty, so this is about our accounting considerations. When accounting for gifts, it is important to consider the purpose of the gift, its fair market value when applicable, the date it was given or received, and any legal or tax requirements that may apply. Individuals and organizations should maintain accurate records that identify the donor, recipient, description of the gift, and any conditions or restrictions attached to it. Gifts given without any expectation or repayment or compensation are generally treated differently from payments for goods or services, making proper documentation essential for financial reporting and regulatory compliance. Sound accounting practices promote transparency, accountability, and stewardship while helping ensure that gifts are recorded consistently and in accordance with applicable accounting standards and laws. Now, accounting for income. When accounting for income, it is important to identify the source of the income, determine whether it has been earned and should be recognized, accurately measure its amount, and maintain documentation supporting each transaction. Income should be classified according to applicable accounting standards, such as revenue from goods or services, investment income, grants, donations, other sources, and recorded in the appropriate accounting period. Organizations and individuals should also consider applicable tax obligations, reporting requirements, and any restrictions associated with specific amounts with specific sources of income. Maintaining complete and accurate records helps ensure transparency, supports sound financial decision making, and promotes compliance with relevant accounting principles and legal regulations. All right, accounting for investments. When accounting for investments, it is important to identify the type of investment, determine its initial cost or acquisition value, establish an appropriate method for measuring its value over time, and maintain complete documentation of all related transactions. Consideration should also be given to changes in fair market value, income generated from the investment, potential gains or losses, impairment, and any applicable accounting standards governing its classification and reporting. Organizations and individuals should evaluate risks, expected returns, liquidity, and tax implications associated with each investment while ensuring that records are accurate, transparent, and supported by reliable evidence. Consistent accounting practices help provide a clear picture of financial performance, asset values, and long-term financial position. All right, accounting for capital gains. When accounting for capital gains, it is important to determine the initial cost basis of the asset, the proceeds received from its sale or exchange, and the resulting gain or loss after considering any allowable adjustments, fees, or expenses. Accurate records should include the acquisition date, deposition date, purchase price, selling price, and supporting documentation for the transaction. Accountants should also consider whether the gain is classified as short-term or long-term under applicable tax laws, along with any exemptions, deductions, or reporting requirements that may apply. Maintaining complete and accurate records may ensure proper financial reporting, supports compliance with tax regulations, and provides reliable information for evaluating investments, performance, and financial decision making. Accounting for undistributed capital gains. When accounting for undistributed capital gains, it is important to determine whether the gains have been realized by the investment entity but retained rather than paid out by investors, and to follow the applicable accounting and tax rules that govern their recognition. Depending on the type of investment and the jurisdiction, undistributed capital gains may affect the carrying value of the investment, the investor's tax basis, or creating tax reporting obligations, even if no cash distribution is received. Complete records should be maintained for statements received from investment managers or fund administrators, and any notices of allocated gains, adjustment to basis, and tax-related information. Careful documentation and compliance with applicable accounting standards and tax regulations help ensure that undistributed capital gains are reported accurately and that financial statements fairly reflect the investment's value and associated obligations. Note: when used as a gift or a form of compensation, FOTS slips, love receipts, money-verse tokens, and love notes must be accounted for just as you would account for any other medium of exchange, including but not limited to cash.
Facts. So when you get these 1099 INTs or any document from us or from an institution that's rocking with us or an agency or a representative, and you getting these accounting slips back, you gotta account for them, y'all. Tax time. Can we say it again? Tax time. You feel what I'm saying? You gotta keep these documents just like you'll keep your W-9s, 1099s, and everything else, okay? This is the real deal Holyfield. And just like that, we just went 21 for 21.